Hi, I'm Judson McGinnes,
And I'm Daniyal Dawood.
and this is our analysis of Freeport-McMoRan for the YIS stock pitch competition. FCX is a very large part of the mining and metals industry, especially with metals like copper, molybdenum, and gold. Now, we are assigning them a buy recommendation today for reasons that you will see throughout this video. The current price of the stock as of the April 3rd is $41.20 per share, and our target price is $55.90 per share, which is a 36% upside.
It is an international mining company that primarily focuses on copper, gold, and molybdenum. As of right now, their primary mines are located within Indonesia, Chile, Peru, and the US, but they're looking to expand within all four of these countries. They're headquartered in Phoenix, and they collect all types of metals, but are primarily focused within copper, gold, and molybdenum.
FCX has a very huge growth potential, especially in the copper, gold, and molybdenum industries where they are pretty dominant, especially in copper, where demand is expected to rise at a very, very great rate over the next 1 or 2 decades, which will in turn increase FCX's profit along with it, and molybdenum, which is also expected to see pretty great increases over the next decade or two. Also, they've been investing a lot of the money into new technologies such as underground mining, more efficient technologies like sulfide leaching, and upgrading their existing mining infrastructure and smelting infrastructure, especially in their Indonesia facilities.
So when looking at the market position of FCX, particularly within the mining industry, it is quite dominant and is expected to grow. Right now, they are the fourth largest copper producer in the world with over 1 million kilotons in 2021 alone. Now, currently, Freeport-McMoRan is looking to expand its existing share of the copper field, so this is expected to rise within the future. As of now, they're also the largest molybdenum producer in the world with over 80 million pounds within 2022, and they're also a very large gold producer. And they're up 31% from 2021 to 2022, and they're expected to continue growing.
So, looking at the copper industry, we see that there's going to be a lot of demand in the next 2 decades, as I previously mentioned, and this is primarily due to huge growth in renewable energy sources, electric vehicles, and just electrifying the world in general. So renewable energy sources typically require a lot more copper than their traditional fossil fuel counterparts. So something like hydroelectric power may require up to 6 times as much copper than would a coal plant. Now, because of this, the copper industry is expected to be worth almost $250 billion in 2030, with a compound annual growth rate of 5.77%, and which is really great for FCX because they primarily produce copper. So seeing this crazy growth in the copper market can only mean great things. Furthermore, by 2030, there's about a 36 million metric ton demand for copper. That's what we're expecting, but there's only currently a 31 million metric ton supply. Now, FCX is in a really, really great place to actually take advantage of this because of the new technology they're investing in. If we look at the molybdenum market, we can see that it's expected to be worth about 5.8 billion by 2030. It's worth about 4.2 billion right now, with a compound annual growth rate of 2.5%. This growth is also driven by electric vehicles, renewables, and the aerospace industry.
So, looking at the market share of FCX, we see that within the fields of copper and molybdenum, it has such a strong market share to where it can have lower cost of productions. They're also expanding their industries into gold, copper, silver, oil, and gas. And they're also developing new technologies such as sulfide leaching and underground mining.
Now, once we actually look into the financial statements and do some financial analysis on this company, we find a lot of really great numbers. Now, for example, from 2021 to 2022 alone, copper sales grew more than 10%, which is an absolutely staggering number. Now, in that same time frame, we saw gold sales grew by more than 30%, which is an even more staggering number considering how much gold is worth and how much gold FCX actually has in their reserves. Now, based on what we've told you in the past, the demand for copper is expected to increase dramatically, especially over the next 1 or 2 decades. And seeing as FCX is the biggest, well, not the biggest, but one of the biggest producers of copper, we know that they're in a position to take great advantage from this. As we know, the demand is fueled by electric vehicles, and it's also fueled by the CHIPS Act and the Infrastructure and Clean Energy Act, which are putting millions, if not billions of dollars into industries that require a lot of copper, like semiconductor fabrication or renewable energy revenue. Now, the balance sheet is also incredibly strong for this company. From 2021 to 2022, their net debt was actually reduced from 3.4 billion to 1.2 billion, which is wonderful. It shows that this company is not really in any issues in terms of solvency, and they actually replaced their most recent credit revolver with a $3 billion credit revolving credit facility, which means that they're now going to have an access to a larger and more readily available line of credit.
FCX is investing in a lot of new mining projects around the world. So this includes the Kusing Liar mine in Indonesia, which is aimed at primarily increasing copper and gold production. So with the advent of this, copper production is expected to rise by 550 million pounds per year, while gold is expected to rise by 560,000 ounces per annum. Within the US, the Lone Star oxide expansion is aimed at raising copper production by over 50 million pounds per year, and the Grasberg Mill Recovery Project aims to increase both gold and copper production, with copper rising by 60 million pounds per year and gold by 440,000 ounces.
Now, our job as value investors is to look for companies that are being significantly discounted by the market. And based on the 3 models and tests that we ran, FCX passed each of these with flying colors. It shows that the market is really undervaluing it. The first thing we did was a discounted cash flow analysis, which is essentially just where we take the expected future cash flows of the company and discount them back to the present. We divide that by the share price, and that ended up giving us a $55.95 per share implied share price.
So alongside discounted cash flow models, we use the power of big data to attempt to predict what future prices of FCX are going to be, and this also indicates they will rise in value. So first, this involved using a long short-term memory model, which is a type of neural network that uses artificial intelligence and machine learning to attempt to predict a stock's future price based off previous sales data. So using our own LSTM model that we developed in Python, we determined that it would consistently grow in price. Secondly, we used Monte Carlo simulations, which is a statistical technique used to take a certain stock price or stock portfolio and run a bunch of simulations of how it'll pan out in the future price-wise. And then you analyze these thousands of simulations to kind of get a general trend pattern of how this is going to grow.
Now, looking at the management, the CEO, Richard Adkerson, has spent pretty much his entire professional life in the mining and metals and oil and gas industry, and he's actually been at Freeport-McMoRan since 1989. The president, Kathleen Quirk, has over 30 years of experience at Freeport-McMoRan, and Stephen Higgins, the senior vice president, has over 40 years of experience in the metals industry. Now, if we turn to the board of directors, 7 out of 11 of the board members have some sort of CEO experience. 6 out of 11 have accounting or financial expertise. There are 8 experts of ESG and sustainability on the board. 36% of the board is women, and they actually added 6 new members recently, which allowed them to have a lot of new perspectives on possible projects and a lot more expertise.
So, especially as a mining company, there are numerous ESG and environmental concerns revolving FCX. However, they've taken numerous steps towards addressing these and moving towards a more sustainable green future. So alongside being committed to having net zero emissions by 2050, in 2020, they established a clause to limit their greenhouse gas emissions by 15%. And in 2021, they spent over $300 million on environmental and sustainability programs. So for example, as a member of Coppermark, it works with large other copper producers to develop frameworks to help make copper mining more sustainable and environmentally friendly. Finally, FCX is also committed towards the preservation of indigenous cultures, as well as creating a more inclusive environment. So 48% of its employees are racial minorities, and they are committed. The company in general is committed towards creating an environment of racial inclusivity and diversity. And so far, they've invested over $2.1 billion in indigenous communities. Another potential concern revolving around FCX is the rising cost of energy. However, they've also taken a number of steps to address this. For example, they are currently shifting towards renewable energy sources. Furthermore, they're expanding their number of mines, particularly within Indonesia, in an attempt to mine more minerals and thus offset rising costs.
Now, with every great investment comes inherent risk, and FCX is absolutely no stranger to this idea of risk. The first and biggest risk is that they're a very, very large copper company. Most of the revenue comes from copper. Now, what that creates is a situation where their stock price is highly dependent on the price of copper. So if copper is not doing so well, it's very likely that FCX stock will not be doing well either. Also, as they expand their mining operations into the underground area, they experience risk there too. That's because underground mining facilities are far less safe than surface mining facilities, which could lead to lawsuits from worker injury, and that could in turn affect revenue and profit. They're also very dependent on water, as they require a very large source of water to successfully run their mining operations. If a scarcity were to occur, those operations cease. And thank you for taking the time to watch our presentation, and we hope you enjoyed.